Well, at a time when market leadership is shifting beyond the index heavyweights and stock picking is back in focus, small caps are once again at the center of the investor debate. But this is not 2020. Valuations are richer, volatility is sharper, and flows are far more discerning. And this comes on the backdrop of stark underperformance vis-a-vis what some of the select large caps did for the entire small and mid-cap universe. So what does it really take to launch a small cap fund in 2026, and that too right here, right now? And of course, more importantly, to deliver alpha in this segment. That's the big question. And joining me today at the launch of the Abakkus Small Cap Fund are three market veterans who are betting big on bottom-up conviction. Singhania, founder of Abakkus, Abakkus Chugh, CEO, and Sanjay Doshi, head of investments and research. Gentlemen, all three of you, welcome to the show here on ET Now. Thanks for your time. And Sunil, I want to start off with the macro setup. You've seen multiple small cap cycles. Are we in the early next phase of a structural bull phase in small caps, or would you say that this is a little bit late and a liquidity driven move that one is seeing right now?
No, I think as you rightly said, small caps have their days, and it's a love-hate kind of a relationship between small cap and investors. People like it when they do well and really, really feel the pain when they don't do well. So I think what we have to see is the last 5-6 years. You started off very, very well. Post-COVID 2020 to 24 was a great period. But typically what happens, Aisha, is when things are going well, we start to extrapolate that. Stocks do tend to become very expensive, and I think that is what happened towards the end of 24. And unfortunately, it also coincided with economy slowing, corporate profit growth slowing, and then you had multiple headwinds in the world with small wars and the mother of all, the tariff issue. And as a result of which, we have seen a massive correction over the last 15 months, particularly in the broader markets, which is the small caps. Almost 40% of the stocks are down 40% from their highs. And I think that clearly demonstrates or presents what kind of correction we have seen. I think as we see now, most of the headwinds have become tailwinds. So the government has been very active. We had 1 lakh crore of income tax benefit, 1 lakh crore of GST benefit. We had a massive infusion of liquidity from the RBI. We're already seeing that impact with consumption picking up. You see auto sales, tractor sales, CV sales, retail sales, they're all doing well. On the other hand, we have seen mother of all trade deals between India and US, and before that the EU and the UK FTA. So I think things are falling in place. Earnings cycle for December has turned out to be better than what analysts expected. This is the first time in 7 quarters that earnings have come out better than analyst expectation. And more importantly, the mid and small cap earnings have done much, much better than the large cap earnings. So on one hand, you have the earnings revival, and on the other hand, you have seen stocks fall significantly from their highs. So, we are seeing merit in now investing in the broader markets. It's a very tough period to sell a small cap fund, but our view is that what is beneficial to the investors is what we should be doing rather than what is easy to sell. So I think we do believe that we are looking at alpha again being created over the next 3-4 years.
Sure, absolutely. But, Sunil, you beautifully summarized it, that, from the 2020 lows, we saw this very sharp re-rating. And then 2025, when there was that reality check where investors perhaps underestimated earnings risk at the kind of valuations that small caps were at. But do you expect now small caps to outperform large caps over the next 3 to 5 years? And I'll tell you why. Because, given that your fund is small cap specific, and there is that entire comfort factor right now with large caps, given what's transpired over the 15 years. So one really wants to know whether this kind of a concentrated allocation to small caps will work vis-a-vis large caps or not.
No, very logical point. So one is, obviously there is recency bias. Large caps have done much better than the small caps. In fact, gold and silver has done even better. So it is very easy to sell gold, silver rather than equity in itself. But if you go back in history, one is the years after underperformance from small caps have turned to be very, very good for small cap investors. So the time to buy is when small caps have underperformed, and this is a time. The other thing is, when India got its independence in 1947, the first trillion, which took almost 60 years, was contributed by hardcore sectors like steel, utilities, cement, textile, jute, and so on and so forth. The period or the phase from 1 trillion to 4 trillion was contributed by private sector banks, pharma, hospitals, entertainment, travel services, IT services, and so on and so forth. I think this 4 trillion to 8 trillion, which we are going to see over the next 7 to 10 years, is going to be contributed by very different sectors. And different sectors necessarily we used to have to start investing when they are small. In the recent past, if you see hospitals, a very small sector, you see how they have grown now. Or even the electronic manufacturing services, very small sector, they become significantly larger. So I think this transition from 4 trillion to 8 trillion is going to be led by very different companies, very different sectors. And I think that is where the opportunity would be. And second, as I said, some of the existing companies have also corrected significantly. And that also presents an opportunity. Ultimately, equity returns are a function of the underlying profit growth of your portfolio. Our view is that with the economy growing at 7%, but inflation down to 2.5%, 3%, the nominal GDP growth is going to be maybe 10%. In that kind of a scenario, large caps can give you 11, 12%. I think the mid and small cap can give you maybe 15, 16% with some alpha. So alpha will be there, not to the same extent as we have seen over the last 5 years, but we definitely expect the smaller companies to present one, faster growth, and second is sectors which are new or upcoming.
Quite interesting. Vaibhav, if I could get you in on the discussion, why launch a small cap fund now when there's a complete lack of trust in the small cap pool? Is this an opportunity window or a conviction call?
Sure. Thank you. Like you rightly said, that over last 2-3 months, specifically if you look at the flows on large cap, multi-asset allocation, gold ETF, that has been on the higher side. So from that parlance, what you are saying is absolutely right. But when somebody is investing today, they are investing for the next 3 to 5 years, and it is our responsibility to launch funds, which ideally should do well over next 3 to 5 years. In fact, when we are meeting, a lot of distributors and investors across the country, a lot of these smart investors and smart distributors, they are looking for opportunities which will do well in next 3 to 5 years, and therefore, there is a lot of interest on small cap. And like Sunil sir rightly said, ultimately it is about earnings, right? So where is that earnings growth which is envisaged or looking like? And that's where another comfort which we are getting, that the kind of earning number a lot of these small cap companies are talking about, that gives us comfort that if somebody has to allocate money today compared to a large cap or a multi-asset allocation, 3 years from now or 5 years from now, ideally a small cap fund should do well. So in nutshell, to answer your question, we want to offer products which are ahead of the curve. Yes, the sentiments may not be very, very favorable for small cap today, but then money is made when you are ahead of the curve, and that is where, as a investing partner, we want to offer products so that investors can participate in the forthcoming period, and that's where we are getting very good comfort.
Sunil, from a positioning standpoint, one would argue as to what differentiates Abakkus's small cap philosophy vis-a-vis any other small cap fund which is out there. And to begin with, I think the more existential question, what defines a true small cap for you? I mean, is it market cap alone, or is it business maturity eventually?
Sanjay, you can just take it.
Sure. Aisha, thanks for that question. I'll take that up. So when you rightly pointed out, what differentiates Abakkus is very clearly our investment philosophy and our unique meets framework, which we use for identifying stocks ahead of the market. If you look at our philosophy itself, that Abakkus investment philosophy, we position ourselves as fairly active in terms of beating the relevant benchmarks. We are not governed by benchmarks. We try to do things which are differentiated. We truly remain focused on numbers, fundamentals, which help us to avoid all the noise in the market. We are very aggressive in terms of identifying undiscovered sectors or spaces or stocks, and which gives us a lead. At the same time, we are very happy to be contrarian and look at things which people may not be interested at the current point of time. So that really plays a very big factor when we look at small cap investing. And the other part we want to highlight on the MEETS framework, which is totally focused on numbers and structural opportunities which will come up. So as Sunil also mentioned earlier, that as the economy moves to the next 3-4 trillion, the composition is likely to provide you many more emerging sectors, and that is where we spend a lot of efforts. Our research is quite deep. We have a team of more than 23-25 people, and we actively cover a very large number of small caps, which gives us an advantage to when you look at the positioning.
And that's the other thing, right, Sunil? I mean, if you would want to add to that, one would wonder, what is it that you want to focus in on sectorally in your small cap fund? Are you focusing more on domestic consumption, manufacturing, export-led themes, or betting now on the inflection point that the new India is standing at? Energy transition, the entire AI theme, etc., that's playing out.
No, so Aisha, it is very logical, obviously, that we will have some preferences. But the whole genesis of small cap investing is bottoms up. Obviously, you have to give credence to the themes, and which we mentioned also, that when 4 trillion to 8 trillion economy happens, it will be very different kind of themes. Luckily for us, India is a country of entrepreneurship. It grows because of entrepreneurs. We have so many listed companies. We have so many also good companies coming up for listing. Obviously, they have to come at the right price, because if IPOs come at the wrong price, they're not worth investing. But there are opportunities. So I think from our side, the only one thing which we like to basically highlight is that we are going to be fundamentally driven. We are not averse to buying expensive stocks, but the growth rate should justify those expensiveness. So for us, valuation commensurate with the growth opportunity, fundamentally very strong companies. We don't like to invest in loss-making companies. I think these are some basic contours which we have set for ourselves. Again, as far as India is concerned, we are 80% domestic, 20% exports. So obviously, domestic is a big opportunity. But at the same time, now with this whole move towards indigenization, Atmanirbhar, and also we have all forgotten China plus one last 1 year because of this tariff thing. I think it is all definitely going to come back. And that also will present opportunities for niche exporters, because the world is going to open up with all these trade tariffs and the trade deals. UK and EU particularly are like path breaking, and those were regions where India did not traditionally have a strong foothold as far as our exports is concerned. So I think it is going to be a very spread out opportunity, and we are lucky that in India we have so many listed companies and so many exciting entrepreneurs. So I think it's going to be very diversified in that sense.
Sunil, the entire sort of asset class of small caps, one big risk, of course, is the liquidity risk, especially if one sees sharp corrections, which one has been seeing the last 15 months. And you did talk about, how portfolios in small and mid caps are bleeding at an individual level, with stocks down anywhere between from, 20 all the way to 80 and 100 and even more. But do you sense that even from these levels, small caps can correct 20% more, or do you not see that kind of a scenario at an index level?
So index in small cap is not exactly the right way of looking at it, because so many companies form the index, and in the index you have companies across spectrum. So many loss-making companies also form a part of the index. So frankly, while obviously tracking the index, we don't necessarily follow the index in our portfolio composition. Whether things can fall, obviously, markets are like cardiogram. They will always be up and down, and that's why we are alive. They can. But from here on, I think unless there is a Six Sigma event, our view is quite constructive and quite positive. The other thing is you mentioned about risk. I would say that small caps are more volatile. They're not more risky. I think the portfolio is risky if you don't adhere to your discipline and you don't adhere to your fundamentals. Portfolios can be volatile. So stock prices can move up and down. Now, normally volatility and risk are taken together or as synonyms. I don't think so. I think small caps can be more volatile, but if your horizon is 3 to 5 years, I don't think they will be more risky. And if you see, Indian equity markets over the last 25, 30 years, you'll always see smaller companies have grown faster because obviously they're in sectors which are growing faster. They're very entrepreneurial driven. We always call large caps as elephants, very difficult to dislodge, but they will move slowly, and mid and small cap will be like tigers, They can be a little volatile, but when they run, they can run really, really fast. So I think the whole thing is you create a portfolio in a disciplined approach, don't get carried away, focus on fundamentals, and that would lead to portfolios becoming much less risky, maybe more volatile, but much less risky. And I think that is what the whole focus is, that don't worry about volatility, but don't take undue risk.
Sunil, lastly, is this for the brave heart, those who can stomach a 20% fall at an individual portfolio level if you were to start investing into small caps right now?
Aisha, I think, for an investor, they need to have a diversification. We are not recommending any investor should have 100% of their equity allocation to small cap. You have to diversify. But if you have to create alpha, you'll have to have large cap, you'll have to have mid cap, and you also have to have an allocation to small cap. Because at least our view is, as I said earlier, that yes, large caps will give you low double-digit returns, but for mid-teens to slightly higher teen returns, you will have to go into smaller companies, and therefore you need to have an allocation. So I would say for any investor, based on your appetite to digest volatility, your allocation should be, measured. For younger guys, small caps make much more sense because they have 30, 40 years ahead of them, and that also will decide how much allocation you'll have. But we will definitely recommend that any investor in India should have at least a 15, 20, 25% exposure to the small caps.
Right. Gentlemen, great to have you today on ET Now. Thank you so much for your time. Vaibhav, Sanjay and Sunil, and good luck with the new